Hello, Leeb Group viewers. Today is October 26th, the year 2010. Welcome to Leeb.com, Leeb.com. And today, China allowed an increase in retail gasoline and diesel prices by 3%. While on one hand, China is concerned with controlling inflation, on the other, it also wants to provide support to its oil refiners who have seen their margins tightened as crude oil prices have gone up. By taking this measure, China ensures that oil companies will continue to supply fuel for the country's growing energy needs. It's not the first such adjustment. China has been using the mechanism for gradual changes in its retail energy prices since December 2008. The higher price levels are likely to be slightly inflationary as energy costs move through the economy, but it can be in effect, at least partially, offset by the higher Chinese yuan, which has risen about 2.6% against the dollar since June. The measure can also be seen as possibly having some cooling effect on the economy, as higher energy prices act as an extra tax on the economy. China announced last week that its economy has grown 9.6% on an annualized basis in the third quarter, the smallest gain in a year, but still a very strong growth rate that exceeded expectations. Consumer prices rose 3.6% in September in China, the fastest pace in nearly 2 years, suggesting that inflation is picking up steam. And there could be more tightening measures on the way. The Chinese growth engine, though it's still churning along as China cannot afford to let growth slip too far, the Chinese government is targeting an annual growth rate of around 8 to 9% per year, far from overheating, but way above slow by most standards. Thanks for dropping by. We'll see you tomorrow.